We'll go in 3, 2, 1.
Welcome to the Legacy Podcast platform. I'm Brian Crane here with Asen Hansen and Caleb Howard on your Tardus Tidbit. And wanted to bring this to you guys here in the year 2022. We've started a new initiative, build out a media studio, and trying to bring a lot more content and FaceTime with our clients, especially with our relationship with the Tardus Group. And Asen Hansen here is the Director of Business Development and has been the one to initiate, pioneer, and really foster our relationship as Legacy Wealth with Tardus. And Asen, do you want to briefly describe that journey a bit and then some things looking forward with Tardus?
Briefly, we ran into Tardus, it's been 3-4 years now ago, and we just recognized that they had a really unique way of evaluating wealth management or wealth development practices, and they were in line with a lot of the beliefs that we have. And so we recognized that there were a lot of opportunities for synergy, and they originally just kind of turned to us for what Tardus calls the end game strategies of being able to invest in opportunities that can continue to compound and create passive income for their clients and have something be perpetual in nature. After working with them for a bit, go ahead.
No, I was just going to say, I know those are some of the things they're looking for, and one of the game changers happened about 18 months to 2 years ago was the legacy income model. And that was your brainchild.
Yeah, after I went to a VIP event, and I spent quite a bit of time with a VIP couple, and they were kind of just telling me what the process was like for them to place their income notes, or not their income notes, their peer-to-peer lending notes. And I just was blown away. I'm like, man, this isn't passive income. You got yourself a part-time job almost. And they kind of talked about just how long it takes to fully fund a flip and all that kind of stuff. And so I came back, and I remember walking into Caleb's office with Caleb and Andy, the chief investment officer, and I was like, guys, we've got to help them solve this problem, make this process a lot simpler and easier for Tardus's clients. And next thing I know, Caleb and Andy have something live and ready to go. They moved very quickly on that. It was really, really, really cool, and it's been fun. And it's we've received a lot of positive feedback that the income model's done exactly what we wanted it to do, to be able to be much easier, much more hands-off way to get the kind of fast burning fuel going with the income snowball. And it's been cool to see how it's been able to meet that expectation, but also perform above our expectations in terms of the investment performance when we first got started.
And I know since that the legacy income model launched, and that was really when we saw the ramp up with integrating with Tardus and started to onboard a lot more Tardus clients. And you look to date, we have 500 clients from Tardus, and it's just incredible. But let me ask you one final question. What are something you're excited about moving forward with the relationship with Tardus, and things that Tardus clients should be looking ahead to?
I think immediately there's kind of two things to be excited about. I know we've had a lot of Tardus clients who have come to us and have said, hey, we want to utilize the life insurance as a line of credit. And, the company that we were placing that business with told us that they didn't want to place those types of policies. So we took a lot of time doing due diligence on what type of life insurance company would be favorable for clients to be able to actually utilize in terms of the way that they're structured, the way that the policies can be structured, and is open to allowing clients to be able to access that line of credit so early on in the life cycle of the policy. And we finally got that done, finally got, all the I's dotted, T's crossed. It took a lot longer than we were expecting, but that is live, that's ready to go. If you have been waiting in the wings for a while to be able to utilize the life insurance as a line of credit, feel free to reach out to us and let us know, and we can get that process started for you. Keep in mind, we do have a bit of a backlog. There is quite a bit of a backlog, for lack of a better term. There was a lot of interest in that, and now that it's live, we've had quite a few clients who we are starting that on, and it's going to take us a little bit to be able to kind of work through everything, but let us know that you're interested, and we'll make sure we put you in the pipeline and help you move forward with that. The other thing is, just because of what we've been able to build here with our media studio, we are going to be a lot more intentional about responding to a lot of the requests that we get is, hey, I want to know other investment opportunities that are available outside of the income model. What do you have available for me? And we want to be much more proactive about, giving you some of these updates of some things that are on our desk that are, kind of coming in that you should be aware of, hopefully, if you're, continuing to fund and grow your wealth. So that's, I think, the two things immediately that I'm most excited about is we'll be able to get this life insurance arm going. We have been able to get it going and get that picked up, and then providing these updates on the different strategies that are available right now.
Great updates, and for all you Tardus clients, be checking your emails. Don't delete these podcasts or these videos coming out, because there's going to be some great information, which kind of leads us into the last segment of the show today. Caleb here is on our portfolio team. He is one that is watching the legacy income model, monitoring it, trading in and out, rebalancing it, and we wanted to get a little bit of an update, Caleb. I know the model has been live now for almost 2 years, and a lot of clients have seen favorable results with that investment for themselves. But could you give us just a little bit of we're here at the beginning of the year in 2022, but kind of give us what happened in 2021 from a return and a performance standpoint of the legacy income model, which a lot of Tardus clients are currently in?
Sure, and we just passed 22 months of what we consider our inception date. We kind of dipped our toe into the water a couple of months before that, but when we really had first dove into this thing was about 22 months ago. I think a lot of people that will be watching this maybe got an email from their Tardus coaches talking a little bit about performance, but jumping into that a little bit, we did last year, we did a little over 19%, and that's total return, so that would include all the income that comes off of your investments as well as those investments growing. And the key difference there, and one of the things I want to make sure I touch on, is that this strategy doesn't just hold its same value and then kick off income like a lot of your peer-to-peer lending notes did. This does have an aspect to it that can grow. It can also lose value. It is the stock market in a lot of ways. While most of these positions are not stocks and companies, they still trade on that stock exchange, and they still react to market conditions to an extent. And we try to actively manage that risk, going into more risk when we feel appropriate and coming out of risk a little bit when we feel appropriate. One of the key numbers on that is that we actually last year, while we had 19%, a little more than 19% gain, the stock market did 29% gain overall total return. And lots of people are going, well, what's the deal? How come you didn't keep up with the stock market? Again, we're not in stocks for the majority of this. These are income generating securities, as well as our standard deviation was almost 1/3. We were at about a 6.6% standard deviation, while the S&P 500 was at a 15.75%.
Wow.
And so we're taking a lot of that risk off the table. Some of that is active management. Some of that is just the securities that we're already in that are going to be less volatile than the stock market in general.
Can you take a quick second, just anybody who doesn't know what standard deviation means?
Sure. So that's a good point. I should have clarified that as well. Standard deviation is a measurement of how much a security goes away from its normal trend line. So as an investment, let's say that if you drew 0.1 to 0.2 and you had a 0% and then a 20% and you drew a straight line, what it's going to measure is how far away it got from that line and how often it got away from that line. And so it's measuring how volatile, how risky that position is, what are the chances of you losing a bunch of money, stuff like that. So a higher number means it is considered a more volatile, a more risky position in general.
So essentially, to kind of break it down for listeners and viewers, we had about 2/3 the return of the market with about 1/3 the volatility or risk.
Yep, a little more than 1/3, but yeah, about 2/3 of the performance. Now, last year it was a very unique year. It's not a year that we expect going forward. Our normal target for this is about a 7 to 8%, maybe a little bit more in normal market conditions. As everyone is well aware, we were still coming off a huge crash due to COVID. A lot of gains, lots of opportunities due to COVID. And that's kind of the key to this tactical management on these investments, that we can take advantage of those situations where your normal passive ETF that's super cheap has no control over changing what it's investing in. It's investing in what it's investing in, and they can't really do anything. When you hire an active manager, they're able to take more advantage of some of these things, and we wanted to make sure that we included that in our clients' experience.
Yeah, and it kind of makes you wonder, when will we have normal market conditions? Because we are coming off such unique times from 2020. But I like how you preface, what the objectives of the tactical income model are, targeting total return of 7 to 8%. And for Tardus clients that, they hear that, oh, this has stock market exposure, and, they've seen the markets the last few weeks, they've seen the volatility, and, if that is something that they don't want to be part of, Legacy Wealth also offers a more conservative income model. And, for people that may want to look into that, how would you kind of differentiate the approach of what should I be considering if going into the more conservative or the normal tactical income model?
Right. So how we think of things at Legacy is we think of things kind of on risk tolerance scale. And so we kind of go preservation, conservative, moderate, and then growth. And one of our big strategies that we use in the preservation and conservative areas is an actual strategy called preservation. And the whole point of that is to just basically keep up with inflation, maybe do a little bit more. And so you want to have the opportunity to not lose money just by being in cash. As we know, inflation causes cash just sitting there to decrease in value over time. And what we've done, and we launched this a little over a year ago, is what we called conservative income. And so it's your income model, but it takes the two ideas. It takes the tactical income, and then it takes that preservation income, or not income, just preservation strategy, and it combines those. And so it really gives the client a more conservative experience while still participating in that active management. And it's really kind of just, if you don't want to worry as much about that standard deviation, it's just a little bit more risk off the table. This last year, I don't remember exact numbers off the top of my head, but I think it did about 11, 12% last year.
So we set the tone that for the regular tactical income model, we're targeting 7 to 8-ish. But for conservative, would you say 3 to 5-ish?
Yeah, maybe even a little higher, maybe 4 to 5, 4 to 6.
Okay.
Yeah.
No,
I think 4 to 5 is probably a good number of what we're typically thinking for that. Yeah.
Great updates and great thoughts for everyone, viewing and listening to, consider. And, as we wrap up, if you have any questions, please reach out to your wealth coach or to us here at Legacy Wealth. I know Asen's email's always hot and, he's always checking it and bouncing stuff back. That's Asen at legacywealthmg.com, or, call into our office, 208-955-0500. But we appreciate you guys joining us here on the Tardus Tidbit, and we'll see you next month.